Good afternoon. Today is Wednesday. It's January 24th. The time right now is 12:46 in the afternoon. Overnight, we can see equity market continue to edge higher with the Dow Jones creating a new fresh all-time high at 38,109.2. And this is very much the same across the board in the other major equity index in the States. Now, the market is waiting for a slew of numbers tonight. We have the ECB meeting tonight. Not tonight, actually this afternoon. And no change is expected in their monetary policies. And of course, we have, like I say, a slew of numbers coming out. Predominantly will be the purchasing managers index for Germany, for the Eurozone, for UK, as well as for the United States. Now, the services PMI is expected to dip to 51 from 51.4 in December, and the manufacturing PMI is expected to stay stable, the same as in December. So we do look out for the services PMI because that is the major sector in the US economy. If that number came out worse than expected, then it will be a negative for equity markets. So do look out for that as well. So in the S&P 500, we also see a fresh marginal high at 4,868.41. And again, the market is very, very buoyant, even though the market participant has actually dial back their expectation of an imminent rate cut by the Federal Reserve. And this is something that we have to watch. And the market is still basically being pumped higher by tech stocks. And today we will be waiting for the result from Tesla. And this is, of course, Tesla, we all knew, have come up 50% from its peak. And all eyes will be on Tesla's earning reports. And the Nasdaq 100 is currently trading at 17,404 after trading to a high of 17,450.3 overnight. And we can see that this market is currently, technically speaking, very, very bullish, but be very careful chasing this market ever higher because the market right now is really a little bit overstretched, technically speaking. And in the Nikkei 225, you see a pullback from just under the 37,000 in the Nikkei 225 futures traded in Osaka. Currently, the market is trading at 36,170. So the market has already come off quite a fair bit. The low traded yesterday was at 36,030. So we can see the market has come down almost 1,000 points from where the peak was just a couple of days ago at the beginning of the week. So this could suggest that there is some heavy profit taking going on. And of course, this is not helped by the fact that the Bank of Japan governor is again talking about normalizing interest rates, and he gave a timeline like somewhere in March or in April, he will basically get out of the negative interest rates. And this is a negative for Japanese equities. And like I said, in previous updates, the unusual negative interest rates policy by the Bank of Japan has actually behind the massive rally in Japanese equity, taking the market to a 34 years high, despite the fundamental being a little bit iffy, in my opinion. So this could actually unravel the entire bull market in the Nikkei 225. So be very, very concerned as talks about a normalization of interest rates in Japan takes hold. And over in Hong Kong, something else is happening. Remember yesterday I was talking about Hong Kong market looking to be very attractive as the market continue to trade lower. In fact, the whole of last year, we can see that Hang Seng has been basically trading down and down and down. And we are only into the third weeks of trading for the year of 2024. Already, the Hang Seng is down 11%. This is a bit excessive. And of course, this is on the back on, to my opinion, a very good Q4 GDP numbers for China at 5.2%, although the market was expecting 5.3. So 5.2 is not too bad, in my opinion. In fact, when you compare the GDP numbers for the US and China sticks out like a sore thumb. It has been doing very, very well. But however, the market sold off Chinese equities, including the Hong Kong market, all the way down to a low. And at the beginning of the week itself, we can see the Hang Seng market actually flirted with the low of October 2022, which was at 14,615 in the futures contract. And the low traded was 14,796. And it ended up with a reversal pattern, and true enough, the market actually exploded to the upside, This morning, we can see prices traded to a high of 15,734. Now, this market is seriously oversold, technically speaking. So based on the Q4 GDP number, I cannot find any reason why we should be selling Chinese equity, including those in Hong Kong. So I would think the markets now is waiting for some kind of stimulus package in the ballpark about 2 trillion RMB, which works out to about 278 billion US dollars. And if that stimulus package actually kick in, is going to take Chinese equity, including the Hang Seng Index, a lot higher. And we can see in the Hang Seng itself, we have a cluster of closing very close to the 17,000 range. We can see October, the market closed at 17,025, November closed at 17,073, and December closed at 7,150. So this is a cluster which I think will act as a natural magnet for prices to rally to. Whether or not it will happen, we will remain to see. But I think it's beginning to look very attractive. Like I said, any pullback may be worth a try to actually try to go counter trend. So this is something you want to watch as well. In the dollar index, the market is pretty. Let me see. The dollar index actually rose to a high at 103.61 overnight, and this is marginally above the November close of 103.46. But the market eased back a little bit, so this is kind of a surprise. Because I was actually expecting the dollar index to start to pull back to test perhaps the 50% pullback area. Previously, I mentioned 101.62. So this level is still going to be my focus. I do expect prices eventually will pull back down first before it goes higher. So my ultimate target will be for a move back to 104.20 to 104.40 levels. In euro dollars, of course, the dollar rose last night, caused the outlook to change a little bit, but by and large, I still do expect a bounce in the principal currency. And euro dollar traded to a low last night. Let me see where the low is last night. It's a 108.22, and we can see a little bit of a rebound this morning, and hopefully the market will go back up above the November close of 108.90, and then possibly targeting the range between 109.80 to 110 levels, okay, which is still my preferred levels to look out for a top in this technical rebound here. And over in the sterling also big pullback, but the pullback wasn't very severe because the market has already pulled back, has rebounded 50% of last night's decline. So right now the market is still looking good for another challenge of the 127.85 to eventually take out the 128.27. In my opinion, the market may have a chance to go and test the 129 levels over time. And over in the Aussie dollars come back to test the demand area at 0.6520 to 0.6550 levels, and the market low this last night was at 0.6552. So we expect a little bit of bounce here, maybe in the three-wave rally, and maybe the market may or may not be able to challenge the 50% of this entire drop from 0.6870 to 0.6525, targeting 0.67. That remains to be seen, but I think this will be a very convenient level for the market to aim for. And the idea is to re-establish short position in the Aussie for another leg to the downside below 0.6525. And dollar in the dollar Canadian, although the dollar index managed to go into a the year's high so far, the dollar Canadian did not quite follow, but the market actually bounced from the low of 134.15 to a high of 134.92 overnight, and the market possibly will eventually grind lower to test the 133.43 levels, ideally into the 133.60 to 133.30 levels, which will be a good area to actually position long for another rally attempt beyond 135.42. Dollar yen is a mixed bag. The market hit a high of 148.80, and it came down to 147.97 on the back of what I mentioned earlier about the Bank of Japan's talking about normalization of interest rates. And this is actually a negative for the dollar yen, because if the domestic interest rates of in Japan actually rises, it will cause a demand, or more likely the case, unwinding of the carry trade in which people have been borrowing the Japanese yens and repump the proceed into equity markets. So this will have a slew of impact across all assets, in particularly currencies and equity markets. So do watch out for that talks of normalizing interest rate to continue to impact the dollar yen rate. I do see the dollar yen coming back to test the 144 half levels, and let's see if that's going to be the case. And in the precious metals actually was flat. Okay, the market did not move at all, even though there were reports of the 24th countries collision led by the US and UK hammering Houthis militant bases in Yemen, and that has not caused any panic buying in precious metals, which normally should be the case, but the market was pretty quiet. And we can see that the market is probably, in my opinion, as you can see, the lows are getting lower and lower. So this suggests that we are possibly in that move where the market is more vulnerable to the downside. If we see market taking out the $2,001.90 level, it would eventually degrade all the way down to below $2,000 per ounce, perhaps initially to test the $1,973 first. But I think this market over the longer period of time is a lower to buy. For the time being, I think the market is probably going to come under a wave of selling. Okay, so do watch out for further losses below perhaps even $1,973. So do watch out for that as well. And over in silver, silver continuing to edge lower. We can see that silver has been underperforming relative to the gold prices. We can see that the new low at $21.91 may not necessarily be the new low, okay, because I see there could be a move towards the $21.40 level. So do watch out for further losses in the silver market. And in oil, oil also did not react drastically to the striking of Houthis militant bases in Yemen, but the price remains elevated. We can see the price, technically speaking, has already taken out a key resistance area, and it has already traded above the swing high here at $75.21 with a new high at $75.42. So technically speaking, this market is poised to go higher. I suspect very soon we will see a price above $76.14, possibly targeting the $77.70 to $77.96 level. So this could be the immediate target, but over the larger time frame, there's a possible of a move to perhaps even as high as $79. So I'm going to stay basically bullish on gold, oil for the time being. And over in Bitcoin, we can see Bitcoin has been falling, and it has been an anti-climax since the launch of the BTC's ETF trading on January the 11th. So we can see the prices has been back paddling, and the market right now has traded to a low of 38,514 yesterday, and not sure whether it can bounce, but the fact that the market has taken out a medium-term support line is not necessarily good for the bullish case. So I suspect any kind of bounce is probably going to be kept under this solid black color line here, which is the previous support now turned resistance. So do look out for a bounce, and then if the market fails to close back above this line, it's probably going to be trading lower again. Okay, so do look out for further losses in Bitcoin. This is all I have for you, and I'll come back to you tomorrow with further updates. Bye-bye. Take care.